The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first chart that we're posting here today into Tiger TV is the chart of the PE ratios and shows the relationships of PE ratios and how important they are as far as support and resistance in the market. And as you can see, we just passed one of those areas when the S&P was down around 16, I guess, in the S&P. Now, I don't use this at all in technical analysis. The reason why I wanted to bring it up is to show that people that are watching that, because price earnings ratio are based on two things, the price and the earnings. So the ratio can be skewed by either earnings or price. So the ratio can go down. If price drops, that ratio goes down. So we want to watch that as it unfolds. Now, yesterday I posted a chart in the Tiger Den here about how the over the past 4 decades we've had the banks make major consolidation, where we're down to 4 banks: Citigroup, Bank of America, JP Morgan, and Chase. JP Morgan, Chase, and what's the other one? Citigroup. I can't remember what the fourth one was. Bank of America, JP Morgan. Well, I'll remember the rest of them in just a little bit. But anyway, what this means is these banks are doing the same thing they did in 2008. And the real problem that we have in our economy that was started, back in when we had President Clinton, when they repealed the Glass-Steagall Act. The Glass-Steagall Act was brought out in 1933, and it was Goldman. That's correct. Thank you very much. And it was to prevent banks from going into investment banking from commercial banking. And that's exactly what's happened now, only to the point that it's just absolutely ridiculous. So this is probably going to be a real disaster before it ends. Okay, we'll start out the work today, and we will look at the S&P, because we're completing some very nice patterns. Whether they're going to hold or not, we're not sure, but this is what we're looking at. If you remember, we had that bottom down there at 1802 back on the 10th, and we didn't have a major correction until 6 days later on the 16th. You'll notice that we came down about 20 points, and that made it a good spot to be a good buyer. And if you'll notice the first correction that we had back on the 18th, you'll notice that one was exactly the same. It was 23 points also. And then what we have now, we had the rally back to almost a perfect 61% retracement last night, up around the 1922 level. The actual number was 1923.75. And now we're setting up for an ABCD structure coming down here to about 900. That's where we should have really good support. And this is the first really good ABCD pattern that we've had since the market bottomed 10 days ago. So this is usually a very, very good pattern. Now, the 38% retracement of this is still down around the 1894 level. So we could get all the way down to that level. But should we go below 1894, that would signal that maybe this little rally that we had that's all it is, and we're getting ready to go lower. Now, we have a weekend coming up, so we get to think about all this stuff. But in general, the market still looks very good. This is just a normal correction that's happening, and it doesn't look like there's anything that's going to be making it crazy or anything like that. That's basically what it looks like. And the other bank, the 4 banks are Citibank, Goldman Sachs, JP Morgan, and Wells Fargo. Those are the 4 banks. Just a little bit of a memory slip, but that's what we're watching. So the S&P today We're looking to find some good support right around the 1901 level, and also 1894. That's also a possibility. But below 1894 suggests that there's something more that's out there. So we'll watch this very, very closely today, and we'll see what happens, of course, over the weekend. But, you know, it still looks, we came off of here so strong that you have to respect that, in my opinion. And some of the other indices have already told us that, so we want to watch that with a lot of anticipation anyway. Now, the next thing we want to take a look at is the gold market, because we're jumping around here pretty good in the gold market, and I wanted to give you folks a bird's eye view of what I'm looking at, and then you'll see whether it's correct or not. And let's give me a second here. Well, let's do the euro first, because this is one that I want to bring out to you, because money never sleeps, folks. Forex markets are open, you know, 24 hours a day, and this is what we were looking at the other day in the euro, and we'll put this up so you can take a look at it. That we had a really good spot here to see with this area down around the 1084 level. And we had a rally, a very nice rally, went all the way back to the 61% retracement of that whole range last night. And then we came down and we made another new low down at that 1.618 expansion level at the 1070 level. So this thing is really rocking and rolling. We're having a lot of activity jumping around in the euro early this morning. So that's really a very good thing also. Now, the $64 question is, how do I get to that gold chart? Let's just make sure I can. No, that's the S&P one. Just give me 1 second here, folks. I know I did the chart. So, oh dear, this is embarrassing when you can't get the darn thing. Well, I'm going to have to get it another way then. That's all there is to it. We'll have to go into Plan B, and that entails going to the desktop and looking at it that way. That's going to be a little more difficult to see, and I don't actually see it right now, so I'm going to have to pass on gold for a minute, and I'll cover that at the break. But what we've done in gold is we were looking for gold to rally up into that 1228 area, which was the 382 retracement, and we went through that very, very quickly. Most of it was done after the gold market closed. It was done in the aftermarket hour, and we got all the way up. There we go. I got part of it here, and then we'll take a look at it now, and we'll be you're right, Mr. Z. It's always something. I have more technical problems than 3 monkeys trying to wash a coconut. But we got all the way up to almost the 786 retracement. We went through the 61% retracement, and the high we made last night was at around 1240, at 1240 and a half, I believe, which was just a tad above the 61% retracement. And then we backed off. Overnight, we backed off $18, you know, to see what was, you know, going on, you know, with the gold market. But that's pretty much, you know, what's happening with it, you know, right now. And we will see what we got here. Now I can update the chart here, thanks to our friends across the globe and across the pond. Take a break, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're looking at gold here, and as you can see, we had a really nice rally up overnight. We dropped the $18. Well, we actually dropped $20. And as you know, that the harmonic numbers in gold are 18 and 36. And so after we dropped those $20, we rallied up to a almost a perfect 786 retracement. And what we're looking at now, and this chart comes to us by way of the cold Northwest up in Colorado, you'll see this beautiful ABCD structure that's forming in the gold market. Now, right now we're trading at 1226, so we're looking for gold to possibly get down another $10 into this area of 1216. Now, of course, we have a weekend coming up, and this is the only way you would hold this, buying it at 1216, is if you had a really nice rally after that 1216 level of at least $10 to $12 in order to keep that overnight. Frankly, I don't think it's necessary to keep positions overnight because we leave so few gaps, and the gaps are usually filled, so you can always enter on a Sunday night, which is real easy. Now, if you looked at the time structure between the time on the AB leg and the time on the CD leg, that's going to take us right into Sunday night. So that would be the time I would think you'd be wanting, to look to be a buyer in gold around the 1216 level. However, remember, folks, that the time is the most elusive of all of these indicators that we have. There's so many things that make it move. A lot of it is astrological, and other parts of it is just the technical nature of the market when people come in, increasing volatility or decreasing volatility. But time is very, very elusive. But this chart, basically, if you measured the ABCD leg, you'd be looking at Sunday night at around 1216. That would be the look at that what we're watching. Now, someone's asked a question. So far, we've been to 902. in the E-mini S&P right here before the opening, and they asked whether that was going to be the low of the day. Well, if I told you that, you'd have to be whacked, and we don't want to do that here at TFNN. So what I would do is wait, the first half hour to see if that low is going to hold. Because remember, setting right below that 1901 level is 1894, and that's a 61% retracement, and that's the number of the universe, and that is the most important, in my opinion. The two numbers that are most important in the Fibonacci sequence are 618, and then of course the expansion of 1.618. And from those, we get our square roots of our number. The square root of 786 is from 618 is 786, and the square root of 1.618 is 1.27. And the first man ever to use square root numbers was, of course, our good friend, the great Italian Pythagoras. People don't realize that he was Italian. People think he was Greek, but actually he was born in Italy and did most of his work there. He just went to Greece for the notoriety, because of Archimedes had been there too. So we'll see what's going on with some of these markets. Okay. We're still holding at that 1202 has been the bottom so far. We're trading at 1903 in the S&P, and we should be getting down at least to that 1900 level, because that's the measured move, and they don't miss it by very much, and especially when there's a number setting there that is relatively important. One question someone's asked me is on the bullish stance of the market, because I've been bearish up until February the 10th, and whether this was just a 5-day rally into the another leg down, I don't know, but it's going to give you a lot of chances to come in, folks, because we have good volatility coming in. We're seeing tremendous swings both up and down. You can't ask for anything better than that if you're a trader. And we're seeing volatility that we haven't seen, we saw a little bit of it in 2014 during the break, but consistently day after day, we haven't seen this since 2008. The banking system in Europe is under a great deal of stress because of Deutsche Bank and Credit Suisse and a few others, and that's been building, and that goes back to that same premise that we talked about earlier in the show today. They don't have a Glass-Steagall Act there also, and so those are the things that you have to realize. With no one looking over their shoulder, they are too big to fail, because they just bailed them out, which was the wrong thing to do. We wouldn't be in this quandary right now, I believe, if they let some of those banks fail and let somebody pick up the pieces and stuff like that. But we have a situation now where 4 major banks, which is an oligopoly, is really running the whole show. Thank God we have these little smaller banks, that are regional banks that are in good shape, and we think they're in good shape, and so that's what we'll be watching here. So this is what we're looking at. So we looked at the gold and the silver. The other market that looks really interesting here is the Treasury bond market, because of the long-term chart that we've had in the Treasuries. We brought this up several times over the past weeks and months in here, and I wanted to bring it up again here because it's certainly good enough to repeat itself, and we want to watch it here because we had this big shooting star pattern, and since that shooting star pattern, we have not been able, to rally very much, and we went all the way down to touch the 164 level, and then we were able to rally back into this 166 level, which is just barely a 382 to 40% retracement of the whole move down. So that's another indication that these bonds have made a pretty major top in this area. How much this will affect the stock market remains to be seen, because there was some type of a flight to quality during January. If you'll notice that bottom on where we had the 3 higher bottoms on Treasury bonds going into January 4th, that's where the market really collapsed from in the stocks, and we went from 18,000 and change all the way down to 15,000 in change in the Dow Jones, and so this is the actual reverse of that. But this pattern for bonds is quite negative. Just looking at the ABCD structure, completing at the 1.618, and then when you add to that the shooting star patterns, you have to say, well, there's something not right. That's the way I would look at it anyway. One other question that someone asked me is, we have had Bill Ehrman on the show here once this past year, and we're going to have him on again soon, but he's right now he's recovering. He's had some health problems, but he's doing much better, and we'll have him on soon. But today is a key day for him. He believes that we're probably reaching a key level here in the stock market, and his work is extremely valuable in my opinion, so we'll keep an eye on that. But this should be a key day of some more, we've hit some type of a major top when we hit that 1.27 in the Dow yesterday, and then we hit the 1.618 in the S&P. That was pretty much telling us that we were going to have a correction. Now, whether 1900 is going to be the bottom or whether we're going to get down to 1894 or not, we don't know. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to shift gears a little bit, and we're going to go into the crude oil market because we've had some pretty good runs here since the 11th of February. We've had a really nice 14% rally. Now we're backing off, and we're backing off very, very quietly, which is really a good thing. If you can see here, we have the higher bottoms forming now from the 11th into the 16th, and it looks like we have a cycle that is in there that we're looking at, and this is just a 30-minute cycle, so you're talking about several days. But if you'll notice that it ends again on Sunday night, so here's something that we want to, actually it's Monday morning. If we want to look at this, this is something that will be pretty interesting to look at. And we have some really strong astrological things coming in. On Monday, I believe we have a full moon coming up. So this could be interesting to watch this crude oil, because we have higher bottoms in here. And if you look at this really closely, you'll notice from the February 3rd to February 11th into the 22nd that we're going to be looking at a situation where we could have a very nice head and shoulders pattern. And as we know from Dr. Andrew Lowe's work at MIT and the non-random walk down Wall Street, that is one of the more popular patterns on Wall Street that technicians look for, and has a very high probability of repeating, plus it has a very good percentage as far as the accuracy of when it works, and that is in the neighborhood of about 75%. So this is something we want to watch in crude oil. That levels that looks like it would be the most probable to hold would be around about $1 from where we are right now, around 130, around 31.10, somewhere in that ballpark, all the way down to $30. You don't want to get much below 30, because if it corrects more than the 786 retracement of the move between the 11th and the 18th, that would tell us that most probably this thing is going to go down and make a 3-drive to a bottom pattern, which would take oil into new lows and go below the $26 per barrel level. We've got gas as low as $1.39 here in Tucson, and folks, I can never remember gas. I've been here 21 years, and I can never remember gas being that cheap, but that's neither here nor there. Okay, now someone's asked a question about the Priceline Charlie was on yesterday, and he's one of our favorite folks because he tells us about the construction business in Mexico, which is always good to hear. And he has a really good sense of humor, and he is always very complimentary of TFNN, as he should be, because they do a great job here of giving really good information of what's going on. But he was talking about selling the Priceline around the $1,250 per share level, and it closed at $1,251. So I assume he's probably tiptoed into the into Priceline on the short side. So we'll see how that works out. But the it's got some really interesting resistance here between 1250 all the way up into the 1275 level. So both of those levels would be something to really keep a close eye on, because if you see that, you'll be able to see that it's being able to see some pretty stiff resistance, and there's a 20-man line that's there also. I'm getting a lot of feedback here this morning from TFNN on the low in the market has so far been 1902. That's a 1 point away from 1901, and they're asking me if that's going to be the low. I don't know. All I know is that there's going to be some strong support there, I would think. That's all I was referring to. There was a beautiful ABCD structure coming in at 901, and 902 is pretty close. I mean, that's within 0.001%, what's in the 1,000% range. So whether that's it or not, I don't know. Usually you want to shade your order by just a little bit, whether you have been filled on that or not. I'm not aware of it, but we'll wait and see. The structure of the stock market still looks friendly, folks. We've had one heck of a run. We've ran 130 points in the S&P since the 10th of February. That's in the 6 days, and now, well, it's nine calendar days, 6 trading days, and now we're backing off just very, very quietly. And the same is true of the move that we had in Japan. You know, Japan rallied almost 9% and gave a very, very small percentage of that back, as did China and as did the Hang Seng in Hong Kong. So all of that tells us that the market is a heck of a lot better off than it was before. That's the bottom line of what we're looking at. So, keep that in mind when we're giving you these numbers here, and this is true whether it's myself or John Logan or Steve Rhodes or Tom O'Brien or Tommy or Basil Chapman. We're always trying to give them within a range, and also to try to tell you, when you're wrong. And the market could easily go down to 1894 in the S&P without any trouble at all. But below 1894, that's where the problem arises, because then you've got momentum going, and the Dow would be down several hundred points on a Friday, and that's usually not a good thing, because people don't do a lot of stuff on Friday. As far as the hedge funds and mutual funds, they do their work over the weekend, and they act the first trading day of the week. And we'll do a test on that later, but I think it's called Monday. We'll do that test a little bit later and see if everybody can figure that one out, and we'll go from that level. Okay, now I want to, I finally got the chart up here for Priceline, and we'll be able to take a look at it here so that we can see why Priceline Charlie is looking at what he's watching here. And we'll just pull it up here, and you'll be able to see it. This is the you can see the big butterfly pattern in Priceline up at that $1,400 level. And God bless him, no matter what you can say good or bad about him, but he had the kahunas to go short up in that level, and not many people did. That was a 3-drive pattern from the May high and the August high, and then also the October high, along with the butterfly pattern. And they don't always work this way, but this was one that was actually spot on. And so what he's doing now, he's selling, from what he said, that he was selling around 1250, and I imagine if it gets up to a little higher than that, he'll add another position on, because he does handle money management better than most people, and he knows when he's wrong, but he does set with some heat sometime, and that's not easy for some people to do. But anyway, this is what Priceline is doing. I mean, not many people are trading a $1,250 stock. When I was first started trading stocks back in 1965, the most expensive stock on the New York Stock Exchange was Superior Oil. It was the old one of the John D. Rockefellers from Standard Chartered or Standard Oil spinoffs, as I recall, and it was selling for $1,250. And the orders would come in. You'd see the tape, because the average volume there was under 5 million a day. We didn't hit 5 million shares a day in the stock market until January of 1965, and then after that, that's all she wrote. Off to the races. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, boys and girls, we're back. This is Billy Ray Valentine from the offices of Duke & Duke here in Philadelphia, 100 South Broad Street. And now we know the answer about the E-mini S&P. Yes, we did get down to the 1900 level, and that's where we're trading right now. And the $64 question that they've asked me is, would I be buying here? And the answer is, boys and girls, if you believe in ABCD, if you believe in harmony, if you believe in symmetry, if you believe in Fibonacci, you have to buy it, or you fish and cut bait. Get rid of your pole and start cutting bait at the old fishing hole. That's all I can tell you. You might be wrong. You put your stop below 1894 and let the chips fall where they may. It's just a pattern. That's all it is. It's an ABCD pattern in the bull market. It might fail. They fail a lot, but they also work a lot. So you want to just be careful and make sure that you do use a stop if in fact you are going to do something like this. It's a little difficult because you're looking at a market that is down sharply this morning, which it's been up sharply quite a few times, and we're in the midst of a correction that we looked at yesterday. That was giving us a pretty good idea of what could happen, and so we'll just wait and see how this market holds up in this area. But you don't have to risk very much at all at this point, and that's the beauty of pattern recognition. It helps you when you're wrong, because when the patterns fail, you certainly don't want to be on the other side of the market. One of the old market adages is, it's much better to be out of a market wishing you were in than in a market wishing you were out. So always keep that in mind. That can happen to all of us. And fear is one of the reasons why people have a hard time doing anything in the markets, because they have the fear of losing, the fear of being wrong, the fear of missing out, all of those things. And you just have to fight those fears and overcome them. And the only way you can overcome a fear, of course, is just face it flat out, head on, and say, this is it. And the reason for that is that most of the fears that we have, better than 90% of them, never happen, whether it's fear of getting cancer or fear of losing a loved one, whatever it happens to be. Those fears usually do not materialize, very, very often. Okay, I've had another question here from one of our listeners, and that is the overall state of the stock market based on what happened to our market that we had in the last Friday on the 11th when we made that major bottom, and we'll take a quick look at it here, because you can see all we've done is we had a really nice rally that took us all the way up to those highs of February the 2nd. We took that out at 16,450, and as we mentioned yesterday, it took that high out by 1 Dow point. Now, if you think that's not hard to do, you better think twice, because that's really difficult. If you look at this chart, which is a 4-hour chart, and go back and look at the 14th of January, and then go look at the 31st of January, you'll notice that also took that high out by just a very, very small amount, and then of course it has a big correction. That leads to a really good rule is that when it breaks into new high ground and new low ground and it doesn't go anywhere, that's usually a pretty good sign. As you can see on this 3 drive to a bottom pattern, we did the same thing on the 11th that happened on the 20th of January. We took out those lows by just a heartbeat, and you have a beautiful 1, 2, 3 bottom, 3 drives to a bottom there, and bada bing, bada boom, the market turns and then has a pretty good rally. And we're still way up in the air. We haven't even come close to making a 382 retracement in this. This is only our second day down. And but Monday was going to be real interesting because of the fact that we did have a 6-day rally, and we'll see how much of a correction we're going to get with this. But that's pretty much what's going on. The Canadian dollar is moving, pretty good today because of the sell-off in oil. There's a correlation between the Canadian dollar and the crude oil contract that's about 90%. In other words, when oil goes up, the Canadian dollar goes up, and when oil goes down, the Canadian dollar goes down, and that's pretty much what we're seeing, going on with the markets, right now. So we'll let the chips fall where they may with that one. The gold is still holding up really well. I mean, we've been in a $10 range most of the morning. We need to get gold to close above the 1245 level. And folks, listen, this gold is has a real chance. And I saw the importance of that high at 1262. But if we take that out after this little correction that we had, and that's all we had was the first day it was down $70, and that's all that it was. And if you remember, the harmonic number is 36. 36 times 2 is 72. So that's pretty much spot on. So, and we've taken back better than 61% of that retracement. So gold has a chance here, to be be a pretty good mover during that time. So we'll see what this is going to be. The open interest in both gold and silver is not showing very much right now. I use Steve Breeze on his open interest figures and stuff, because he's probably the best there is with open interest, and there doesn't seem to be anything really exciting going on as far as the open interest. If you remember back when gold was making a high at 1932 back in April of 2011, I believe. Yeah, 2011, what was happening was you were looking at a market that had open interest was dropping as prices were going up, and that's nothing more than short covering. And that's a real vacuum beater right there, because the vacuum will come into that market and drop like a rock, and that's exactly what happened with the gold. We're not seeing that right now. That's it. The name of the gentleman that I use is Steve Breeze, B-R-I-E-S-E. Can't remember exactly what they call his surface, but I get it every day, and it gets a pretty good idea of what's happening. Plus, I check it myself. I go to the www.cme.com, and I look under volume and data, and I go down to the futures, and it's got all the contracts there in metals, interest rates, livestock, whatever you want to look at, and it'll tell you what the change in open interest is. And what I'm looking for are big changes on the upside or big changes on the downside. Because if you got people leaving the market, that's just as important as people entering the market. So that's why I'm watching it. I don't look at volume that much. Frankly, I don't see anybody any better in volume than Basil Chapman myself. That's called the Bullish Review. Thank you very much, Marshall. I've got some smart people in this room here. It's called the Bullish Review. He does it with financials, and he also does it with commodities. So both of them are in there. But he does a really good job at picking those particular things out. So we'll see what's going on. Okay, now. We've talked to see the gold is trading now at 1230. We had we went from 1220 all the way up to almost 1236, and then we backed off to a 78% retracement, and now we're just bouncing in between here. Not too much is happening at this point right here. So we'll see what's going on. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks. On a totally different note, we have a very dear friend here in Tucson, Arizona, who is he's a referee for college wrestling, and he's being considered as one of the premier referees for the Olympics in Spain this summer. So I'm going to be his baggage handler if we do that. So anyway, he does a lot of refereeing around the. Well, he even does foreign countries. He does Mexico and Canada, and he's also done things in the UK and Australia. But he's being considered for an Olympic referee, which is a real feather in his cap, and so that'll be fun. Anyway, let's get back to the markets. So far, that 1899 level has held. The low is 1898.75. If we get above, 1917 by some stretch of the imagination today, that would be above the 786 of this last move down from 1923 down to the 1899 level. It's just amazing how this market has moved in increments of 23 points. And as we mentioned, basically the harmonic number in the S&P is 5.5 points, and if you multiply that to 4, it comes out to 22, so that's within a point of 23. So that's telling you that this thing is bouncing around the way it should. Now if we go below the 1899 now, 1898.5, that'll certainly take us down to the 1894 level. So if you were smart enough to buy it down there, you might want to put your stop just under the low to protect yourself, so you would have basically a risk-free trade if you were going to do something like that, because the market did rally 9 points after 8.5 points after the bottom was in. But it's still early, not too much is happening as we go through. We've got the weekend coming up, and we got a lot of astrological stuff coming in on Monday, so it's going to be probably rocking and rolling would be my guess. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.